Welcome to 10 Things Social Purpose Organizations Need to Know About Finance and Accounting, our very last session of the year. It's definitely fitting to be looking at some finance things at this point in time as you look ahead to next year. And as you make some plans on how you can optimize your finance and accounting processes. I'm super excited to have Moaz here. Him and I have connected through other communities in the nonprofit and entrepreneurship space. And oh, sorry, just want to make sure everyone is muted. Oh, sorry, Moaz, it's for some reason it's at the very end of the presentation,
Yeah,
so
I
we'll
don't
just
know.
restart.
Jeez. Okay, hold on. Let me.
Like, yeah, no problem. I just want to stop it and restart it.
Yeah.
So awesome, perfect. We will start off with our land acknowledgement, as we do with most of our session, or all of our sessions, sorry, in the series. So just next slide.
Okay.
Awesome. So we acknowledge the Indigenous peoples of all the lands that we're on today. Well, of course, here we're on Zoom. We acknowledge the importance of the lands that we all call home. We do this to reaffirm our commitment and responsibility in improving relationships between nations and to improving our own understanding of local Indigenous peoples and their cultures. From coast to coast to coast, we acknowledge the ancestral and unceded territory of all the Inuit, Métis, and First Nations people that call this land home. So for those of you who are not familiar with Good Growth, we are an upskilling company for nonprofit organizations and purpose-driven businesses who are seeking to invest in their people and help scale their mission. And what that looks like is we do training, membership, consulting. We do a lot of custom training and facilitation as well for various organizations, primarily across Canada and online. That being said, this is one of our free series, of course. And our purpose of this series, which we are continuing next year, is to help upskill everyone and just build community and introduce you to some of the people that are the experts in what they do, such as Moaz. So we're also happy to partner with Canada's largest social innovation community, which is the Center for Social Innovation. Whether you are looking for a physical space to work out of or an event space or an online community, they're a great place to start when it comes to collaborating with other change makers. So it's an exciting movement to check out. What makes Good Growth a company, a team, is this collaborative network. So we have quite a few individuals who are part of the roster who work on our consulting projects, our speaking, our mentorship, all different things that we do, including these seminars. Some of the people on this screen have actually, majority of them have facilitated a session already from the 10 Things series. But you can work with these individuals and many more through Good Growth as well. You can feel free to reach out to me if you have any questions about that. And with that, I would love to turn it over to introduce today's topic for the 10 Things series, our session on finance and accounting. And with that, Moaz, I will turn it over to you. I'm really excited to have you share all these awesome tips that you have for nonprofits and social purpose organizations. We have a value-packed presentation for you, and there's tons of questions that have been submitted, which we will get to at the end. I'm also going to invite everyone to introduce themselves in the chat shortly while Moaz goes ahead and gives his intro. So over to you.
Thanks so much, Daniel. And it's great to be here. Excited to be here with all of you. Thank you for those of you who came on camera. Megan, shout out to you. We'll be shouting out your QuickBooks for Nonprofits group later on. Yeah, I see some other folks here as well that I know. So thank you for making me feel comfortable that way. I'll go back up a little bit and I'll say I love these caricatures, if I can call them that. And I would join your roster, Daniel, just to get one of these. Okay, so keep me in mind.
Sounds good.
So yeah, I'm a founder of AMLB. We're a virtual accounting firm and CFO business supporting social purpose organizations across Canada. Try to create capacity and take away the stress for leaders so that they can focus on serving their communities and on their priorities. This is a little bit about me. I don't really want to talk about myself too much here, so I'm just going to say I have experience about 15 years as a board member, between being a board chair, a treasurer, and heading up a finance committee to now serving as virtual CFO and controller to I think it's about 12 nonprofits, and then there's a number of for-profit businesses as well that I support, and then my business partner Ali has a number of others. I've had a great opportunity to travel and internationally as well see what the nonprofits landscape looks like. And I'm always very grateful for, Canada and the community that we've built here. And I think, there's good and bad with social media, but one of the things that I've really, really enjoyed is the ability to connect with nonprofit accounting practitioners, around the world and to learn best practices from them. And Megan, as I called out earlier, is here as well. And Megan, you can please feel free to jump in anytime if you have any thoughts on any of these topics. Not to put you on the spot, but I did think about you when I saw that you were attending. Yeah, so let's get into it. We have 35 minutes to get through the easy topic of finance and accounting at a Monday lunchtime. So I'm sure that's going to be breezy, but let's try. I've got 10 things that I think social purpose organizations need to know. And I think before I go into it, I'll just say I'm not going to dive too deep into, tax and compliance topics. I think if there's specific questions about that, I'm sure we can coordinate through Daniel and we can get them answered. I did see the questions that came in, and there's some really good ones about what does a modern finance tech stack look like? What are some considerations for board members? And I think those will all be covered. And the basis for all of that is, in my own research, was that I think the starting point for a nonprofit leader is that financial literacy matters, right? I've spoken to many, many nonprofit leaders who are like, well, I'm not good at this thing, which is finance and accounting. And so I'm just kind of not going to look at it. And I'm going to focus on what I'm really good at, which is fundraising or operations, or sort of other aspects of
Let me just
the
show you
organization.
here. So
I
basically,
can hear some background noise.
okay, so
Thank you. So there's just some stats here which indicate essentially that nonprofits that actually prioritize implementing strong financial practices that demonstrate transparency and responsible financial management, and that think about financial planning and oversight actually have significantly better opportunities to achieve their mission and to sustain over the long term. So there's, detailed stats here. I'm not going to read them all out, but that's essentially what this point is. Happy to answer any questions on this, but I will say in my own experience, I have seen this firsthand. Those who invest in their team's financial capacity, to learn about topics like what is the financial statement, what is a budgeting process? How do you effectively engage with the auditor? And what's the value of that kind of reporting to your donors? And thinking through those topics really generally seem to perform better than the organizations that do not prioritize that. Okay, so this is my attempt with screen share to use a case study method because slides are what they are, but I think just reading financial statements themselves and showing a contrast between two types of financial statements can be helpful. I will say that folks who have attended my Ontario Tech University session on nonprofit finance may see some duplication, so I apologize in advance. But I'll just be going a lot faster through this. In Canada, there are two methods for accounting for the revenues that your organization gets, right? There's a deferral method and the restricted fund method. And I'm going to show what that looks like practically on a set of audited financial statements so that you can quickly identify when you're reading financial statements, your own or others, which method that organization uses. And it's really important to know which method is being used currently and think about what is the best method for your organization in the longer term. I will say generally the restricted fund method is more complicated, but it can often result in more useful reporting for organizations, especially when you're receiving a lot of restricted funding. Okay, so that's generally my high level is restricted fund method is probably more expensive to implement and maintain, more complicated because you're tracking different funds. But ultimately, it can be more useful if you're receiving a lot of restricted funding. Okay, now let's attempt this. So, okay. So I have on my screen, can everybody see like a side-by-side two PDFs? Okay, thank you, DP. So the first one here is the financial statements for Ovarian Cancer Canada, and the other one is for Canadian Cancer Society. These are both publicly available financial statements for the prior fiscal year, so from 2023. And if you're looking at financial statements like these and you want to quickly identify what are the components of a financial statement, the table of contents is always a good place to start. They will look very similar. So they will always have the auditor's report if it's an audited financial statement, statement of financial position, which is basically your balance sheet if you're used to that terminology. And then you've got either a statement of operations or a statement of financial activities. Both of them are similar to what you would expect to see in a for-profit as an income statement. Okay. And then you typically have your statement of cash flows and then the notes to the financials. I'm going to jump right to the notes to the financial statements because a lot of people I find don't read these notes because there's just a lot of, it can feel like technical jargon in these notes. But there are a couple of areas in these notes that can be quite useful. So typically the first and second note are quite helpful. The first note will give you a summary of what the organization's mission is and some historical information, when it was registered, and also what type of organization it is. Is it a charity? Is it incorporated federally? Like you'll notice here, it talks about the organization incorporated under the Canada Corporations Act, and then it continues. So there's some interesting history here. So it's a Canadian, it's a federally incorporated. And then for CCS, it's also federally incorporated. That will give you some ideas about whether they need an audit or not and under what conditions versus if it was provincially incorporated. The other one, which is super important, I think, is the summary of significant accounting policies. So again, number one, they're both similar. And the key one to focus on is the revenue recognition. So you'll notice under Ovarian Cancer Canada, it says they follow the deferral method of accounting for restricted contributions. And CCS follows the restricted fund method. So as we mentioned earlier, there's two methods that you can follow. If you're following the deferral method, then when you look at your statement of operations, you'll just see the revenues here, you'll just see the year, and all the revenues are grouped into one, all the sort of one group under one column, and then you'll see expenses grouped all under one column. If you look at CCS's statement of financial activities, it's called, because it's operationals and externally restricted funds, you'll see multiple columns. So whenever you see multiple columns like this, you know they're using the fund accounting method. Okay, so that's just something good to know. And they're doing this because they are receiving quite a few externally restricted funds. So they're trying to show that this is what what money we've gotten this year, and we want to recognize that versus the deferral method, which they would put that under deferred revenue on the balance sheet. So you'll see this deferred grants and donations under liabilities. Again, it gets a lot more detailed, but I just want to cover at a high level what are the components of a financial statement and the key differences between the two major methods of financial statement, revenue recognition. I'm going to keep going. These are just things that are from the standards, but I wasn't going to read them in detail. I believe they're available as part of the slide deck later. Number 3, so financial policies, these talk about, from a finance and accounting perspective, let's say you're at the, even if you're at the $250,000 revenue level and you're growing, I think definitely if you're at 500,000 revenue or expense level, you need to have a set of policies that govern your financial management framework. And typically there is a treasurer or another board member who is sort of the finance lead, and they should support the executive director on establishing these policies. For those who have not used ChatGPT yet, it is incredible that it can help develop these financial policies in a matter of probably 30 minutes. You could develop 3 policies, where in the past it would take you, 3 to 6 hours, if not more, to do that. If I have time at the end, I will go through and show what prompt you can use in ChatGPT to develop these policies. Sorry, let me actually just go through quickly. So the first one is assigning authority policy, and the second is expense and procurement. So both of these are around how do we spend money at the organization, who approves that spending, and do we need to have different levels of approval depending on the nature of the expense or the amount of the expense, right? So those are typically the considerations. And then, in the case of vendor selection, for example, can you sole source up to a certain threshold, and then above a certain threshold of spend, do you need to have 3 bids? That's typically what we see at organization. The last one, reserve fund policy, is something that I'm seeing more prevalent in organizations since the pandemic because of the experience during the pandemic and organizations realizing that shocks to the system really need to just be considered something that is going to happen within the next 5 to 7 years. Another black swan event, kind of event could happen. So we need to have some funds set aside for this. Well, if you're going to set aside funds, then you should have a policy on how those funds can be utilized. Do they need board approvals to transfer, and for what purposes they can be used? Okay, so I'm hoping this works now as well. This is an example of a modern finance workflow on the next page, but currently what we see with a lot of organizations is a multi-step process for multiple accounting workflows. One example that I've heard of a lot, and actually one of the questions came in, so it really worked out that way, was around paying invoices. So paying vendor invoices. Well, I need to have a board member approve the invoice. We send him an email. Have to follow up with them. It takes so long to get back. Then we have to, manually enter into the accounting system, and then I have to cut a check, and I have to wait for the treasurer to be available to then sign the check, and then I got to mail the check out. Well, it's a whole process, right? And there is still a process. There are still controls, but given the advent of cloud technology and the ability to integrate systems, there is a significant opportunity here to reduce the time that you spend and to increase the accuracy of your transaction processing. Typically, what I'd say an executive director or their delegate spends on finance, 12, 15 hours a month gets cut down to 3 to 5 hours. So that's a significant savings when you can use that time to spend on focusing on growing your organization, focus on serving your community. Okay, so let me see if I can access this now. Can you see a screen with my Chrome browser?
Yes, I can see your browser. Yep.
Okay, great. Thanks, Daniel. So this is an application called Dext. And there is an app on my phone that I would download, and we have our clients download as well. And there's a way to even email in invoices into this app. Essentially, it is a repository of invoices for your organization, and it has optical character recognition technology. It also has some machine learning built into it, which I'll show you as an example. So here, this is an actual invoice that our business gets. So it's from this company, CreoSpark. On the tab here, you can see it was emailed from their Intuit account to our email addresses, but it was also sent to this unique email address called amlbmoes@dext.cc. When you forward emails that you receive from your vendors to this email address, it goes into Dext. It's pretty cool. And then when you go into details, all this information here has been pulled from the invoice. So Dext has a 90, I want to say 8%, 98% accuracy rate when it comes to pulling these details, and it's incredible. It pulls from crumpled bills, invoices, and it gets it pretty accurate. A key thing for us as accountants is it pulls the currency accurately. So if it's in US dollars, it'll pull US dollars. It'll pull the tax. And for charities and nonprofit organizations, the tax rates can be different. So it actually will, we set up different tax rates for the charities and then it pulls out the right amount. So when we're doing the HST filing, it's pretty automated. There's not a lot of manual work. It will indicate whether it's paid, yes or no. And then this we would hit published. Now it's already published because I'm showing you an example of a transaction already processed. There's a button publish. This gets published into your cloud accounting software. The software we use for our business is Xero, but we have many clients that use QuickBooks Online and we support both. And this is the example of the transaction. When you hit publish, it comes into here. And the cool thing is, instead of having a filing cabinet with all these invoices, you have Dext, first of all, which has incredible search capabilities. You can search by all kinds of things. You also have it in your accounting system. So when I click on this PDF, it brings up the same invoice that was in Dext. So this went from email to Dext to Xero. From Xero, as soon as it's over here and it's awaiting payment, you can see it's in this bills to pay at the top. That automatically, okay, this logged me out, but I'm going to log back in. CreoSpark, and I think it was this one here. So this is the tool that we use for our business, and many of our clients use, but there's different tools you can use to process the payment to the vendor, right? So I'm here and I go into settings. So typically for a nonprofit, what's really important is getting the right signatures on the check. And typically, I was a treasurer. I had to go in every month and sign those checks. And I love this because I've tested it thoroughly, and I love the fact that it's got the payment approvals here. So when I click here, I hit manage, and then I can add an approval rule. And I can say which bank account it applies to, and then what are the approval rules. As an example, for our business, we've set up from 0 to 5,000, we need one approval, and here's the approver. Above 5,000, we need two approvers, and here's the approvers. And it's by bank account. And then when that approval goes through, it actually goes to the individual's email. So as a board member, I'm at my cottage, it's the summer, I don't have time to go in and sign a check. Well, I get an email notification, I can click it. And the other cool part of it is the actual invoice is attached to the payment. So if I'm trying to approve something, I'm not kind of wondering what is this for? It says 142, but I'm not really sure what it's for. Well, it's right here, the attachment. And it's the same attachment that went into Dext. And you can click and you can sort of see here what it's for. So, it's great to see a lot of nonprofits in Canada adopt this type of workflow, but I think we're at 10% adoption. Whereas if you look at Australia and New Zealand and the US and UK, they're at 50% plus adoption of cloud technologies that are integrated straight through. And so I'm really positive that we can make an impact in the next 3 to 5 years. So that's the cloud workflow. This is just showing it in a pictorial representation. Here, I'm going to skip over that. GST, HST. So there was a question that came up about this, so I tried to include it here, but I will say that it can be quite complicated. So my first advice would be talk to your accountant and ask them whether you are eligible for input tax credits, whether you should be charging HST. But at a high level, I would say, depending on, first the question is, are you a registered charity or a nonprofit organization, right? So based on that knowledge, are you a qualifying nonprofit organization? So do you have more than 40% of revenue from government sources? So if you're either a charity or a qualifying NPO, then you may be eligible for this thing called a public service body rebate, which means it's pretty significant because you get 69% of HST that you paid on expenses back. So you want to make sure if you are a charity, I've seen a number of charities that have not actually been claiming their public service body rebate for years, and we'd kind of come in and do all the catch-up filings. You can go back a couple of years. But that's something that you should definitely ask your accountant if you are doing properly. You should also check if you're an NPO, whether you should charge HST on certain supplies. Because if you charge your HST correctly, where you're supposed to charge it, then you can also claim the input tax credits accordingly. So that's something else to consider. Again, there's a lot of nuance there, and CRA has pages and pages of guidance on this. One example I've put in here is, do you sell goods versus do you have membership fees that you are selling within a professional organization that is mandated by law? So there's actually that much nuance between two types of revenue that you get and whether you should charge HST on those. Okay, I know I breezed through that one. There's a lot more there, but I'm happy to take any questions on that. So restricted funds, I think this is a really important one, and I've seen this come up more and more in board meetings over the last 3 to 4 years, basically post-pandemic. Is okay, do we have enough of a contingency fund in case of a major disaster, right? Natural disaster, health pandemic, whatever it could be. And generally, the guideline is that as an organization, you should aim for a contingency fund of 6+ months of operating expenses. So if your annual revenue is a million, or sorry, annual expenses are $1 million, you should aim for an operating reserve, or sorry, contingency fund, we're calling it here. It's also called an operating reserve, but a contingency fund of about $500,000. Right? It is very hard to get to that level if you've never really thought about it. And so I would say start with uh, smaller, actionable, and achievable targets. So typically I say to organizations that I'm speaking with, start with 3 months, right? So $250,000 and talk to your board about it, make it a priority, put away money for those funds. And then you can look at also investing those funds into GICs, into other financial instruments, obviously that are within the risk appetite and risk profile of your organization. Um, so I just jumped actually pretty quickly into the thing that was in my mind as most important, which was the contingency fund. But I'll take a step back. The broader question is like, well, what is the big deal with restricted funds? Well, a lot of organizations will go out there to donors and apply for grants that say you can only spend money in this specific way, and it all has to go towards programming. And I've seen a lot of issues with that where everything that you get is grant funding that is tying your hands in many ways, and your mission is, you're drifting from it because you've got all these grants that you're trying to satisfy the terms of. And so I don't have a good answer, honestly. And I think, Daniel, you probably have other speakers that are way more attuned and knowledgeable on the topic of fundraising. But all I can say from a financial management perspective is I would say consider whether that grant actually helps you advance your mission and whether you can find alternate sources that are unrestricted funds. If not, then at least try to make that grant that you're applying for have more flexibility so that you can allocate a portion of that towards your operations, towards administration, so that you can invest in your organization's growth and your people and your development. So that's just my high level monologue on that topic. And then in addition to a contingency, so sorry, that was externally restricted funds. Then we come to internally restricted funds, which one example is the contingency fund, right? There are other examples of funds. So I've seen organizations that have, had a major, influx. Let's say they got a donor that just donated like $1 million, and it's kind of sitting there on their balance sheet now as an asset, and they want to indicate to future donors because they still need to raise money for certain programs how they're going to spend that money. Because typically a donor will see a lot of money sitting on the balance sheet and say, well, they don't need money, so I don't need to donate to them. I'll donate to another cause. But if you as an organization want to have more funds coming in because you have causes that you're trying to advance and you still need that funding, then I would suggest other funds and allocating that cash to different funds. Examples I've seen are the funds that are over here. One is a technology and innovation fund, and the other is a research fund. So typically, I would say healthcare charities have a research focus, and so a number of them have actually created a research fund. So it's very clear to donors that even though it says $1 million in cash on the balance sheet, that 900,000 of that is allocated to spend on this priority for the next year. So actually, they only have 100,000, and so yes, they do need money for the rest of their programming. And the last one, technology and innovation, I would say is becoming more important because of the advent of artificial intelligence, because of the opportunity to take advantage of cloud-based technologies. And, there is a huge opportunity there for nonprofits to invest, but it's going to require it to become a separate priority, at a certain scale. Daniel, I just wanted to pause because I feel like I'm talking a lot and fast. Any questions that I should be addressing at this point, or should I keep going?
You can keep going for sure, and we'll get to the questions at the end. Nothing urgent in the chat.
Okay, thanks. Okay, so the next one, number 7, is budgeting. So uh, many organizations that I've worked with have a budgeting process, and it is loosely followed. And I would say some organizations follow what are leading practices in terms of a well-defined budgeting process with quality inputs for decision making, and then using that budget is actually a useful tool in the coming year. I've seen a lot of organizations create a budget and then it's just kind of put on the back burner. It's not really useful in the course of a year. And then you spent 30, 40 hours at the beginning creating it just for board approval and it's not really used. So here, what I'm trying to convey is that if you think about your fiscal year, and on the right side, by the way, is a prompt that is from ChatGPT, so you can actually use the same prompt if you like, to create a budget development plan for your year, right? So the prompt is you're the new executive director of a membership-based organization, and you need to prepare a budget for the fiscal year starting on May 1st, 2024. Put the project plan into a table format with 3 columns: what, when, and whom. And this creates your budget plan for you. And when I read it, I said, that's actually quite good because it includes things like getting your prior year's budget and, analyzing your current situation. It also talks about priorities for the next year. So these are all inputs, right, into your budgeting process. And then draft an initial budget document, get some feedback. Now, I don't agree that it should be the board of directors that does the initial review and feedback. I would say the initial review is done likely at the CEO level, at the CFO level, and I would recommend including the treasurer early on in that discussion to give them an indication as to what you're aiming for in your budget. There are a couple of ways to budget, right? One is you just say, whatever my priorities are for the coming year, I'm going to go from bottom up. So what are the expenses that I need to incur to achieve my priorities? Then I'm going to figure out the revenue that I need to bring in to achieve those priorities. And then, it may not be realistic at all, or it may be right on the mark based on your historical, experience. The other way is called, like zero-based budgeting, right? So it's saying, well, whatever expenses I have and I'm carrying them forward. I assume some inflation. I sort of make some changes and then I make sure that I have the revenues equal to those expenses. And then of course, there is another method which is to aim for a surplus, and then over a period of time with generated surpluses, you can create certain funds, as I mentioned before, to invest in certain priorities over time. So let me see here. Yeah, and I think the last part here is also monitoring your actual expenses versus your budget results on a periodic basis to identify risks and opportunities. So as I mentioned, a lot of times the budgeting is done, then it's sort of put on the side. But using, cloud-based tools right now like Xero, QuickBooks Online, and other reporting tools, it is actually quite straightforward to enter your budget into these tools and then to create a report called a budget to actual report that you can just pull on a monthly or quarterly basis. You can get more sophisticated and use other data fields in these tools, like in QuickBooks Online. and Megan will know this way better than I, so I'm sure I'm not doing it justice, but you can use the projects module. You can use the customer, I think it's called sub-customer module, to then enter who you're getting grants from and what those grants are, and then start doing reporting, using those modules. So again, I can't get into too much detail here, but happy to answer any follow-up questions on those pieces. Okay. Audit. So everyone's favorite topic. If you weren't hungry yet, then you'll be hungry now. We have worked with a number of organizations that have required an audit and didn't realize that they required an audit. And it's a bit of a rude awakening because it's obviously not cheap to have an audit done. And so it's very important to budget for that at the thresholds for your organizations, when you hit those. So there is the Ontario Non-Profit Corporations Act. Hopefully I'm saying that right. ONCN, and there's a CNCA. Canada Nonprofit Corporations Act. And depending on if you're incorporated federally or provincially, there are different criteria and thresholds for when you need a review versus an audit. There are a couple of tables, and I've linked here the sources. So I would say please go on to those links, and I think Daniel said he'll share those with the group later, and that may be easier to understand. But generally, I would say most nonprofit organizations are soliciting organizations because you're getting more than 10,000 in revenue from, funds from the public, donations, or from government grants. In that case, you need a review engagement done if your revenue is between $50,000 and $250,000. And you need an audit done if you're greater than $250,000 in revenue. There are exceptions to these rules. So there are waivers that you can have approved unanimously by your board. That is in the links. If you're provincially incorporated, then the question is, are you a public benefit corporation or not? And basically, public benefit means you're getting more than 10,000 annually in donations or gifts from non-related people. Again, most organizations that we'd come across are public benefit corporations. And so if you have $500,000 or less of revenue, you can have a review done instead of an audit. And greater than 500,000, you need an audit done. Audit will, if you're at about, I would say, $3 million in revenue, right? These are high level numbers, so please don't quote me on it. But I would say you expect to pay between $18,000 and $30,000 for an audit. That's a question I always get, is how much should I expect to pay for an audit? How much should I budget? If you're at sort of lower than that in kind of revenue, then you can expect to pay a little bit less than that. Audits have become more expensive over the years because there's less auditors, less organizations with that specialty. And I think that was one of the questions here. Reviews are cheaper. So if you can, please make sure you look at the rules and see if you can have a review done. Because a review is probably at about 60 to 75% of the cost of an audit, right? So that is a way that you can save some money there. And at the end of the day, you're still meeting the Corporation Act rules. Okay. Number 9. Okay, we're doing all right here. Investing in your organization's financial management. So I was thinking about, what are the kinds of questions that I get that are kind of unique over the past couple of years of talking to hundreds of nonprofits. One of the questions I always get is, well, I have so many things to invest in. Like, I can't really spend money on financial management. And I'd rather spend money here or there. And I would say this is what we've seen. And so I'm just sharing it out there so that you have a sense. If you're between 750,000 and $3 million in revenue, you should expect your annual investment in your finance function to be between $30,000 and $90,000. Now, this is including like a review engagement. I would say it doesn't include sort of an audit engagement at like the $30,000 level. But generally, you should say budget to invest about 3% of your revenues if you're up to $8 million in revenue. When you get past 8 million, you can probably keep at the 2%, 1.5%. Again, it really depends what you want your finance person to do. In the case of the first row on the table, I've said, what are your options, right? You could have a part-time bookkeeper, a full-time finance and admin manager, maybe at the $90,000, level, tough to find still, or a CPA firm that provides a team of part-time people, somebody doing payroll for you, somebody doing bookkeeping for you, or one person doing all those things for you. So I just want to put that out there because it's a question that I often get when I'm talking to organizations. Okay, and then a question that came to us was about tips to engage your treasurer and finance committee on financial matters. So what, can you do to make that relationship more effective and more useful for yourself as an executive director? So I would suggest number one, and it's surprising how many times I see that this doesn't exist, is have established terms of reference for the treasurer and or the finance committee. Again, ChatGPT is our friend here, or any other AI tool. It's pretty incredible if you're specific enough about the type of industry that you're in, and you put some details about your finance committee and or treasurer, and it will create a good terms of reference for you. That in itself, I've seen, and then a conversation between the ED and the treasurer about expectations, time commitments, just refresh on that leads to a transformative change in that relationship. A couple of other things here is as part of the onboarding package for new board members, I would suggest including these last couple of components. One is what kinds of questions should boards be asking around financial management? So there's two questions in this 20 questions directors should ask about risk from CPA Canada. And CPA Canada actually does a really good job of producing these 20 questions to ask and you can just search it up online and it's there on their website. But there's two questions there. And then the last one is reading nonprofit financial statements. And it has example of a financial statement, the components, and how to read a financial statement. So for a new board member who's not used to not nonprofit financial statements, I've seen a lot of board members come in from for-profit organizations. They're like, oh, is this a balance sheet? Is this an income statement? Where's the profit? Right? Like just very basic questions about surplus, deficit versus profit loss. Why is this thing have multiple funds in it? So this document helps explain some of that for you. Okay. As I said earlier, if you're an executive director and you have somebody on your team using QuickBooks Online, I would highly recommend them join that group on Facebook if they're on there. There's a training link to training there that is based in the US. But a lot of the content, I would say probably 80% is applicable to Canada because QBO is quite similar across US and Canada. There are some nuances that you'll notice. The report on charities link there has some interesting stats about what the CRA's recent audits and reviews of charities found, and what are some areas that they identified for improvement, from those audits. There was nothing to me that was very surprising, but I thought it was a good reinforcement of some of the best practices that we've observed. There was a question about where can I find accounting firms focused on nonprofits? I actually don't know if there's a list of those, but I'm sure an online search or you can talk to Daniel as well. But I've put some firms in here, including ours, that do focus on nonprofit organizations. And these two law firms, if you're ever looking for a lawyer, again, I have no affiliation with either one of them, but they're well known in the industry is the Blumberg and Carters, and there's several others as well that I'm happy to recommend to people. We've got some really strong lawyers that focus on this space. I'm going to skip this because it's just showing what our two plans look like for clients. And then there's takeaways. So I actually wrote an article about, I was kind of being interviewed about what are the top five, things that you would leave an organization with in terms of how to improve your financial management. So these were the five things, and we've covered most of it as part of our presentation here. I think the first one is just, as you think about yourself as a leader, you ask yourself honestly about your financial literacy and competency in this space. You may have that, right? As I've noticed many nonprofit leaders do. But you also may self-identify and say, okay, I realize that I'm a 2 out of 10 on this. Well, then I might need to augment that with somebody, surround myself on my board, on my team, or somewhere else who is an 8, 9 out of 10 on this so that I can have those complementary skill sets. And so I think starting early, trying to build a relationship with someone, there's a lot of great people out there that want to do mentorship that are, willing to help out as volunteer board members as well. And I think I'll leave it at that, Daniel, because I know we've got about 12 minutes here and we've got a lot of questions.
We do definitely. Thank you so much, Moaz, for running through that. We got tons of questions. So what I'm going to do is I'll rapid fire through them, and we'll stop sharing the screen just so that I can keep running through them really quick. And for those that you've already covered, we'll just pass on those ones.
Okay, great.
Okay. So first things first, which part of financial statement is important for an executive director to know? So you already did cover that. We'll skip through that. How are budgets created for grant applications? How do we prepare for accounting documents properly to ensure there's no errors when filing for taxes or applying for grants? So I'll just answer that really quickly too, is that we do have some sessions on grant writing. If you're interested in information on that, let me know. But Moaz, I would assume that from a grant writing application, in terms of tools people can use to help double check their documents, is there anything quickly that you would share there?
Yeah, I mean, I did look at that question, and I think it's like for us, it's pretty basic. Is always have a second set of eyes on it and somebody with experience in grant applications. So that's solid. I mean, obviously using cloud-based tools to come up with accurate bookkeeping, like your bookkeeping needs to be accurate, right? That's a basic sort of premise for submitting data around what your needs are. So I would say definitely focus on having accurate set of books as well. That will help.
Makes sense. Okay. Are there any financial management efficiencies through the use of AI or automation for a small organization that is very diligent about their financial management?
Hmm.
Other
Well, actually, oh,
banking,
go
of
ahead,
course.
Daniel. I
Just
think
other
I'm
than
not sure if
what
it's
you
me, but I
know
think it's lagging a little
already.
bit there.
Yeah, you can just go ahead. Go ahead.
Oh, sorry. Okay. So I was just saying that look, ChatGPT is free and it is also $30, I believe, a month if you subscribe to the pro version. Uh, I use it almost every day, and it probably saves me 5 hours a month, which is $6, or sorry, $5 an hour, right? So, it depends on sort of what your priorities are, but I would say certainly investing in one of these tools can be helpful. Another tool that I find super helpful is called Fireflies AI or Otter AI for meeting note taking. And I know a number of our clients actually started using them when they started seeing them in our meetings because we can easily transcribe meetings, create summaries, and get action items done. So it's about having the organization move at speed and with accuracy that hasn't really been possible previously without these technologies.
Okay. Sorry about the connectivity issues here.
That's okay,
Um,
no worries. Let me know if you want me to just continue, but happy to take the question from you.
yeah, for sure. So how can nonprofits utilize the fundamentals of finance and investments to boost revenue? So obviously you talked about, managing existing funds, but how could they take advantage of it to help boost revenue?
So I probably need more context on that question. Is what does that mean?
Yeah, I'm not sure if the individual who asked it is here live or not, but
Yeah. I mean, my only comment there would be that if you do have a surplus of funds, then making sure that you're evaluating options for the use of those funds. For example, or sorry, not use of using those funds to generate additional revenue, like interest revenue. At this point, with the interest rates where they are, still reasonably strong, and I think you can probably get a GIC at 4%, which is pretty good. And if you keep that for a year plus, and you have $1 million of cash on your balance sheet, then that's going to earn you $40,000, right? So that's one example. Another example, like I said, is make sure that you're earmarking your cash for different priorities and that you're communicating that very clearly to your stakeholders so that it's not like they're seeing a lot of surplus funds on your balance sheet and it's not clear what you're doing with those. So I think just that communication and the storytelling to your members or your constituency is super important.
I think that's really, yeah, that's a really helpful way to address that. Absolutely. Um, okay. So it's great that you mentioned some AI tools already, just because there's been quite a few questions about AI tools already. That being said, was what are some things to look out for, some concerns that you might have, or things that people should just double check before kind of diving in?
Great question, by the way. And I'm sure we can do a whole separate session on AI and how to manage the risk there. But specifically, a couple of things that we've done with our team and in using AI. One is that if you're using it with other people, they need to be aware that you're using it and be transparent with your stakeholders, right? So if you're using it to write an email and there's data in there that was directly from ChatGPT, first of all, I say to the team, we are responsible for the output, not ChatGPT, right? So you got to double check. I will say ChatGPT hallucinates often. And so you will get what sounds like a very confident answer and it's completely wrong. And so you need to fact check everything. So that is a limitation of ChatGPT. Another one is I would say we have a shared account that we, like multiple people, use. And I don't know what sort of the policies are around that, but we are very careful about saying to people that you cannot put client data in there. We do subscribe to the pro version, so it actually doesn't train the broader model on our data and it's kept confidential, but still, we do not want client data within ChatGPT. So we say you have to scrub your data and we audit that. So we check what prompts are being used. We can access the entire team's prompts and see if anybody's using client data in there. So those are some of the ways is I think you got to control it very carefully. I know, in my wife's company, for example, they don't even allow the use of ChatGPT, and many companies, large enterprises, do not allow it because they don't understand it, right? So it can almost be a competitive advantage for a smaller organization because you can use it and just try to put some controls around it so that you can, benefit from it.
Great answer. That's super helpful. We had a question regarding the use of treasurers, mentioning how it's not an easy role to fill. And some people, apparently some organizations avoid having it. So what are some ways to encourage or train people so that they're actually equipped to take on the role of treasurer and do it properly so that they can support the organization to continue its mission?
Yeah, that is a really good question, and I don't have a good answer for it because it's something that I have personally been trying to think about. And the only thing I have been doing personally as a CPA is being in contact with the community of CPAs and raising the profile of what it means to be a treasurer and how it can benefit, you as an individual, as an accountant, because I feel like I learn way more through these experiences than I can ever give. But I would say if you're trying to find a treasurer, plug into Charity Village. That's an example of a place that you can go and you can do a posting for a volunteer treasurer. Look at CPA Canada. I believe there's a place there that you can go and post for volunteer board roles. And then there's also what I remember the first board role that I got was through All True Vest Board Match. I don't know if that still exists, but I believe it did a couple of years ago. So that's another example is plug into these board sort of match or board job portals, which allow you to post for free as an organization, or you might have to pay a couple, $100 for that. And then cultivate relationships with people in the finance profession. Put it out there on LinkedIn. You never know where LinkedIn messages go, right? So yeah, not a great answer, I know. I'm sorry, I don't have a better one, but I've struggled with that too because I have a lot of people that come to me and say, "Can you find me a CPA for my board?" But there just aren't as many as there is demand for it.
That's definitely a need for sure. Um, so as we wrap up, I'm just gonna see, was if there's any final questions that you wanted to answer based on the list. I know that we covered the vast majority of them already. But if there's anything that stood out to you that you wanted to share, but haven't already been covered. And Heather did recommend in the chat alltruevest.org, which seems like a service where you can match with your boards and things like this. So hopefully you can find some treasures on there as well.
Awesome. Nice to see you here, Heather. Thanks for sharing that.
Cool. Okay. I think for time purposes, was if there isn't an immediate question that you want to jump into, I'll make sure that we wrap up and we share those resources with everyone. There was a much more in-depth question, and I think for that one, the person who asked about paying invoices, I would probably recommend emailing us, and we can connect you with Moaz for that. That being said, thank you so much, Moaz, for all the incredible tips you shared and the value. I know a lot of it, is very specific things that require people to look into more, but I've provided a bunch of those links in the chat. And I think as an overview, this is super helpful to give people in the social purpose space and nonprofits things to be looking out for. We'll provide, of course, your contact info for those who are looking to reach out to you to learn more about your services and potentially seek your advice. For everyone, just wanted to say on behalf of Good Growth and Center for Social Innovation, thank you so much for being part of the series, for attending, and we look forward to more in January. We already have a few sessions lined up, talking about community development, talking about data and analytics. So there's some exciting things there. And if you are interested in the recordings to all of our sessions from the year, this is the 19th session. We do have a membership that you can access to get full recordings. If not, we do post blog summaries from every session on our website, and you can find more on our social media as well. So thank you so much, everyone, and thank you again, Moaz.
Thank you, Daniel, for hosting, and thank you all for nerding out with me on finance on a Monday. Enjoy the rest of your week.
All right, take care, everyone. Bye.